All right, hello again, everyone. It's Dima Khoury with Compass in Burlingame. So I'm back to bring you more information about what's happening in in San Francisco real estate market and how there are some differences in trends between the single family homes and the condos. Very interesting, and there is some call for buyers and investors if they're interested in. Profiting for the next year or so in San Francisco market. And I'm also going to talk about the mortgage forbearance, the mortgages and forbearance market in the U.S. and whether there will be an expected big foreclosure market coming up or no. So as always, I start with the interest rates. So again, we're still at a very low interest rate level. We're still at 2.81%, which means that this is a great time for buyers to lock in this interest rates. And in San Francisco, with the condominiums and some single family homes in some areas are going down in terms of property price in comparison to previous weeks and months and year. So this is really a good time to look into buying and seriously consider it. And for sellers, there is still demand in the market, more so on the single family homes, more than the condominiums. And even for the condominiums, it's different between one district to the other. Um, you can see a big difference in the trend. So let me share my screen with you so that we can start talking about the mortgages and forbearance market. So as I said earlier today when I was live, so the forbearance prediction or the initial forecast when the pandemic hit or where when we started the shelter in place, it was expected to be at 30%, yet the actual peak was at 8.6%, and the current is 5.67. Yet we're still gonna see that in for the previous weeks of November, we're even way lower, half of this number. So these numbers are showing that there is really slight chance of a big foreclosure market, which is a great news for sellers. So the number of consumers with new foreclosures, comparing this throughout the years, looking at throughout the years of different economic crises, starting from 1999. So we can see that the peak was in 2008, 9, 10, and 11, started going down in 11, which was triggered, the economic crisis was actually triggered by a real estate market crash. And in today, we can see that with everything that's happening, we're still way lower than any of the years throughout, like since starting from 1999. So again, this is really good news for the sellers. And for the buyers, there's always a chance to make good money and to profit and to benefit from the real estate market. So it just depends on the strategy that you're taking to buy. So you just need to change your strategy and look for a different deal in order to make sure that you're maximizing your purchase and selecting the right property for you for your strategy. And looking at the trend also, so the number of mortgages in active forbearance is decreasing dramatically, and these numbers are in millions. So for the past 2 weeks of November, we're at 2.86 and week 2 was 2.74, and this is down from the peak in May 29, which was 4.76. So again, the trend is going down, which is good. So this definitely answers the question of whether there will be a big foreclosure market or not. Now, the Bankers Association chief economist is saying that nearly 2/3 of borrowers who exited forbearance remained current on their payments, repaid their forborne payments, or moved into a payment deferral plan. all of these borrowers have been able to resume or continue their pre-pandemic monthly payments. So hopefully this is some interesting news for the buyers. Now, let's look at San Francisco specific numbers on how many properties came on the market during Thanksgiving week, during last week. So the number of active properties that came on the market are 49 properties the total, and 26 of them are condominiums. So we can see a huge drop. Like this is almost 50% of the number of properties that are coming on the market in comparison to the week before. So the week before it was 97, last week was 49. So this is almost 50%. And that's due to Thanksgiving. Now, the pending properties, or the number of properties that went in contract or now are pending, are 131, and 73 of them are condominiums. And the number of properties that closed escrow are 89 properties, and 45 of them are condominiums. Now, again, we can see that the majority of activities in the real estate market in San Francisco is more going towards the condominiums, and that's because we can see that there is more supply and there's more demand for the condominiums, yet we need the demand to be as big as the supply so that properties start moving faster. It is still a seller's market though, and we're going to look at the numbers also. So, and the last number, which is the number of properties that came off market or and that's between canceled, expired, withdrawn, or on hold, are 58 properties, and 44 of them were condominiums. Now, looking at the absorption rate, which is the artificial equation that we use to try to predict how many days or months is it going to take the current inventory or properties on the market to sell. So for the single family home, we're at a great number. We're at 1.2 months, which is a month and 6 days to sell all the properties that are on the market, single family homes. This is a big time seller's market. And for the condominiums, we're at 3.07, which is we need 3 months and 2 days to sell the current inventory on the market, which is still a seller's market. It's really a strong seller's market, yet it's not as strong as the single family homes. Now let's look at more stats and charts that reflects also the activity and trends in San Francisco market. So let me share my screen again with you. Okay, so this chart shows us the active listing on the market. So we can see that there's, as I mentioned, there's more supply for the condominiums than the single family homes. So the supply, as per end of Q3 of this year, we were at almost 3,000, which is double, almost double the number of properties that are coming on the market for the single family homes. And there are some big number of properties that are selling, but yet it's not really matching the supply. So for the single family homes, we were at 1,600, yet again, for the condominiums, we're at almost 3,000. Now, this chart shows us year-over-year changes of median sale prices and average price per square foot, which are very interesting metrics to look at and see the difference in trends. So you can, it's obvious here that we can see there is a big difference in the trend between the condo market and the single family homes. So for the condominiums, the one bedroom condos, they're closing at 8% lower in terms of median sale price, and in terms of price per square foot, it's 9% lower. So this is an indicator that property values are slightly going down in comparison to previous year. So this is where the buyers need to look at and see the big opportunities where they need to buy, and especially with the low interest rates. So a very low interest rate with low property values going down. This is a big flag, like a red, like a big call for the buyers to just go on the market if they are planning to buy in the next few months. So this is really a good time. And for the 2-bedroom condos, we're talking about 1,000 to 1,500 square feet. So they are both the median sale prices and the average price per square foot are selling lower than previous quarters and year, 9%. Now, looking now at the single family homes, we can see there is a difference. So the 3-bedroom house, which is between 1,400 to 2,000 square feet, it's selling 1% to 2%, 1% higher in median sale price, and price per square foot, it's 2% higher. So it's slightly higher, but it's still like this indicates a stable and strong values for the single family homes within these criteria or specs. Now, the bigger single family homes, which are 4 bedrooms, around 4 bedrooms, they are selling at 3% lower for the median sale price and 3% lower for the price per square foot. So they are slightly mimicking the trend for the condominiums, yet it's not as big of a drop, like it's 3 times for the condominiums. Now, average overbidding and underbidding in quarters, and this is as per Q3 in 2020. So we can see that the majority of districts in San Francisco are selling above the market. So the average is 2.4% for all San Francisco neighborhoods. And the highest was the Sunset, Parkside, Golden Gate Heights. And we can see that there are 2 neighborhoods, and these are high-end neighborhoods, Pacific and Presidio Heights, and Marina, and Noe Valley, and Glen Park. These are selling slightly lower than the asking price. So they're experiencing underbidding on the list price. Now, looking at the condominiums, it's all the districts are selling lower than the asking price, and the least was Hay Valleys and Pack Heights, and the most that are selling lower than the listing price is Russian, Nob Hill, and again, these are high-end areas, South Beach. These are really nice areas where you can find great condominium. So again, this is a big call for the buyers who are in the market and delaying it because they think it's not the right time to buy, but the numbers are showing that this is really a great time to jump in the market. It's like, this is an opportunity. And with interest rates expected to go higher in the next few months, and San Francisco is a strong market, there will always be a great employers market, so there will always be activity. So it will come back eventually, probably towards mid next year. So the numbers are going to change. So this is really a good time to go on the market and buy if you're a buyer. So this is what's happening in San Francisco. Very interesting stats and very interesting differences in the trend between single family homes and condominiums. And if you are interested in selling or buying, or have any question about your specific neighborhood or the type of property that you're thinking of selling or buying, please feel free to reach out. I'll be more than happy to answer any question that you have and provide you with much more detail. So I'll leave you now. Have a wonderful weekend, and please be safe.